Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, February the 11th. The year's 2021. Let's talk trading. Keeping your eye on the ball with Walmal. So I want you to keep your eye on the disclaimer because these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, once again, since you're a former baseball player, I guess we're going to use some baseball metaphors. Keeping your eye on the ball. Doesn't matter if you're at the plate or you're in the field. You got to keep your eye on the ball, right?
That's exactly right, because, if you don't keep your eye on the ball, you're going to find yourself in trouble, whether you're out in the field or, trying to go and, play defense, or if you're at the plate, and you're trying to go and, take on the challenge of the pitch being thrown at you, but you got to keep your eye on it, that's not just true of baseball. That's true of life. I mean, everything in life is that way. You got to constantly be looking, paying attention to what's going on around you and reacting to it. So if it can be said of life, it certainly can be said of trading as well. Because one of the things I've learned is that if I'm doing well in my life, I do well in my trading. When I have bad days in my life, I have bad days in trading. And when I have bad days in trading, well, that day seems to be pretty bad too. So it's one of those things where I think they go hand in hand with each other.
Well, the other thing is if you're on the team and you're sitting on the bench, you better keep your eye on the ball, because if it's a foul ball and it's coming in the bench at 90 miles an hour or more and you're not paying attention, you could get clocked upside the head.
Well, that's exactly right. Yeah, and not only that, if you're sitting on the bench at that moment in time, and I think this is analogous to trading, and that is if you're sitting on the bench, that's analogous to sitting there on the sidelines and waiting for whatever setup, for whatever method that you're using, waiting for that to show up, and be ready to go. And okay, I'm in that position. It's now time to go play ball. It's sort of like the Walmal method today. You could have made money on it today, but man, it would have been rough sailing because you look at the ranges for the hours today. You're talking about, I'll just read them off for the last 5 hours, including current. Current hourly range is 21 pips. Then it was 15, 11, 10, 16. So you're sitting there, you're watching that, and it's sort of like you're on the bench. Until you see something break through that, you know that you're in a day that's just not moving. Or what you do is you say, you know what? I now see what's going on in the market, and I take advantage of it. You could certainly still make money, but you would have to go and look at it a little bit differently and see how you could make money on it. For this particular hour, you could have gone in at the 30 line, or what you could have done is you could have gone in at actually 29 if you missed that, because that was the close of the previous hour. And you just had an opportunity.
You mean the low of the previous hour?
The low of the previous hour, exactly. Yeah. The hour before that, it's the type of thing where you only broke 40. You only broke 40 by, maybe 3-4 pips. But, one of the things with that method is, with the updated way I've been doing that method, is if I go and break the high of the previous hour, then you could have gotten in there, and you would have gotten in at, let's say, 34.8, and you could have gone and picked up, almost 10 pips on that trade. So you got to go and, look and see what the day is doing. If the day is sitting there and it's a condensed day like it is today, in fact, this entire week, it's been a very, very, slow-moving week. Very, very small candles in comparison to what we've been seeing for the beginning of this year. You look at today's candle, 46 pips so far. Here it is at 9:50 Eastern time. By this point in time, that we should be approaching, 100 pips for the day if we haven't exceeded it already. But we're still at 46. We're at half of what we're supposed to be. We're only in the 15th percentile of what a typical day is on a pound dollar. And yesterday was only 63 pips. The day before that was only 81 pips. The day before that was 69 pips. And even Friday was only 74 pips. So we're in a period right now that, for whatever reason, we're going through a period where the day ranges are very, very small. And I think I don't know why, but I'm thinking the market's trying to figure out where's its next train station, as I like to say. Where's the next train station where it's going to go? And it's consolidating up, building position up. It's not like there's not volume out there. There's volume out there. It's just that it's not moving in one direction or the other.
That's for sure. It's definitely not.
You know, and the other thing too is, there was a trader that I noticed out on the Facebook page, and I think he said he had like a 92% success rate, but he wasn't sure if it whatever. Well, there's two things I'd like to say to that. One, you get 51%, you can make a lot of money, but 92%, you certainly can make money. But I think his concern was that, he was making small wins. Well, small wins are, that's good. That's fine. Because the reality is, if you go and just keep on building your account up, those small wins mean bigger lot sizes that you can take, and that adds up to going paying the bills. And you just got to remember that. You just got to keep on going. And I'm just saying this as a word of encouragement. That's what you need to do. The second thing I'd like to say is that, you have to figure out if a method is going to work for you. And I say this all the time. You got to go and match the method with your personality. And trading something for, a couple of days is not long enough to really know that. And then the third thing, I said it was only going to be two, but I'll add a third thing. And the third thing is, the reality is the most important thing is managing your risk. It's the type of thing where, if you make sure that you're not going and over leveraging yourself, make sure that, you've got rules in place that you're willing to take this many losses in a day, have all those things in place so that, you're going to have bad days. You're going to have a day where, I don't win every day on the Walmal method. It's, no strategy. There's no strategy out there that's 100%. But there are, but you're sitting up there, normally I'm winning 85 to 92% on the Walmal method. That's typically where I am. And over time, you just, you're going to have days where you're not going to win. Okay, that's fine. It's sort of, like anything else in business, there are going to be days when you don't make money. There are days when you go and, you hit home runs with making lots of sales and lots of money coming in. And there are days when, unfortunately, stuff comes back into the store and you got to give the money back on it and you take a loss. Well, that's trading too.
You don't really take a loss. You just, you get your whatever you're selling back, and you're just going to have to find somebody else to buy it.
Right. Yep, that's true. That's the difference between trading and just about every other business, is that in trading, not only do you get to break even, but there's a potential that you actually go underwater from it. So,
right.
But the thing is that, and we still have all the other troubles that most businesses have. In other words, overhead, power, all those other costs of business, they're all still there. They don't go away magically. I guess they're less because you could do this out of the office in your home, or even your bedroom if you wanted to. But there's still real costs there that you have to go and pay attention to.
That's true.
So the whole idea: keep your eye on the ball, manage your risk, manage your trades, manage what the market's doing today. I'm seeing the market's doing. We've only made 46. Well, we only ranged 46 pips for the day, but this will be a shocker. I just went and did my charts, or my books for the end of the day, and we've moved 46 pips. But the thing is, I've actually made 49 pips on the day. How is that possible? Well, it's that thing called travel, up and down, and I was able to go and do it. And I've had three losses today. So I took three big losses. Well, not big, but there were three losses that I took that mitigated against that. But I made up for it, and so you just back and forth, back and forth, back and forth. And I didn't violate my rules of, if I go and take three losses in a row, call it quits. That didn't ever happen. I did take two losses in a row, but I never got to the third one.
Well, I just noticed we got 22 pips this hour, so something's picking up here.
Yep, exactly. So we've actually, and an interesting thing is, it's actually a down candle. We got a red candle, and it's gone down, and it went down almost to the low for the day. It just missed getting to the low for the day. So it's kind of interesting. It'll be interesting to see what happens. We got the new hour coming up in 5 minutes. Really interesting to see if it goes and breaks that low. If it does go and break that low, I'll probably go and jump in short. Not saying anybody else should, but that's probably what I'm going to do.
Yeah, because it looks like that would be the part of yesterday's wick zone there at 13.9. I'm just flipping back through the charts. See, we missed pivot the day. We had two missed pivots in a row, but we did pick up pivot here. But out of it, let's see, 1, 2, 3, 4, 5. 3 out of the 5 days we've had missed pivots. So things are not statistically, they're being kind of abnormal. Once again, we did take out today's pivot. You can see here, green rats, get ready to feast. Looks like there should be a feast coming up soon.
Yep.
On the buy zone, looks like the short traders are getting a trigger here, but you have to look. You know, it might make a new daily low, it might not. You'll just have to wait and see. The range, once again, is only 46. I mean, there's just no range at all.
It's just one of those days.
Yeah.
And, and sometimes you see a day like this, and if you're not comfortable trading a day like this, you're your own boss. Take the day off.
Exactly.
There's nothing wrong with going and doing that and taking the day off. And that's, this whole, the title of this video being, keep your eye on the ball. Well, that's part of keeping your eye on the ball. I like to call, sometimes when I do that, I like to call them education days.
Yeah.
Where I just go and take the day off from trading, but I'm still going and educating myself. I'm still watching the market, watching how the market moves, because you know what? I may go and see something and realize that, the next time I get a day like this, because it will come again, maybe there's a way I can take advantage of it. Maybe there's an opportunity out there where it fits into my trading plan, so I'm not violating my trading plan, and I can go and actually make a few pips. It's that thing. Maybe a day like today. My idea for a day is I want to go and get a core of 10 pips for the day. Well, maybe I only get 2 pips. Well, that's okay, because that's 2 pips more than I had the day before. And if you look at my trading plan, the thing about it is that I base that on only trading 200 days a year, so that I have basically another 40 days during the year where I know I'm just going to break even or I'm going to lose. And that'll go and come out in the wash.
Exactly. So
that's, go ahead.
Yeah, I was going to say, so in keeping with keeping eye on the ball, it's not just the charts, it's your money, it's your environment. You have to make sure things are working right, because today, Walmal, you said something wasn't working right. So, and then you had to go figure out what wasn't working right.
Yeah, I had an EA that helps me go and place trades and take trades off, and for whatever reason, I don't know why, it just stopped working. And then I found out that for whatever reason, it went and flipped the switch. I probably flipped the switch on the thing, but I don't remember doing that. But next thing, I'm sitting there, I'm in profit. Come on, get out. Get me out of this trade. And then next thing you know, I didn't have a terminal window up, so I had to open up the terminal window and actually close it with the terminal window. So, I usually don't go and say how much money it is on a trade, but, I was up like almost $250 on the trade, and next thing you know, I went punched out. And I think I basically covered my commission. I got out with like $35, $40, something like that. And it's like, that was just so frustrating, because, to be honest with you, that's part of keeping your eye on the ball. What I should have probably done was in the very beginning of the day, maybe I should have just taken a trade for, a penny a pip type of thing, and then been able to get out of the trade just to make sure everything's working properly. Should have probably done that, sort of like getting into that on deck circle and making sure everything is working for you mechanically. But I didn't do that, and that's probably something I'm going to consider to go and put into my trading plan, because unfortunately this is like the second time this has happened to me. So you know what? I think that's something that can get written in.
Yeah, definitely.
Because, here's the thing. Yeah, I got out, covered my commission, so I didn't take a loss, but it would have been a whole lot nicer to put a couple $100 into the bank account.
That's for sure. And once again, traders, the fastest 15 minutes in trading is up. So you definitely have to keep your eye on the ball when you are trading, because it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.